May 8th, 2026? Let's get into it. Quick shout out to today's sponsor Compete Token, the gaming crypto that actually has real games behind it. Link in the description. Bitcoin just dipped below $80,000 and dragged 300 million in leveraged longs straight to the graveyard. Classic Friday, the over-leveraged degens who took a fifth mortgage to buy the top finally got the haircut they paid for, while spot holders barely looked up from their lunch. Honestly, this is healthy. The market is flushing the people who treat 10 times leverage like a strategy and rewarding the boring folks who just keep stacking. Bitcoin is still up massively year over year. This is a flesh wound, not a funeral. Saylor said the unsayable. The man who once told you to sell a kidney before selling Bitcoin just told the market that strategy will probably offload some BTC to fund a dividend, and prediction markets immediately ripped to 82% odds it happens this year. Look, the company is sitting on over 818,000 Bitcoin, worth more than $65 billion. Trimming a sliver to silence the critics isn't capitulation, it's a flex. He's basically saying, yes, I can sell, watch what happens to the price when I don't. For about 5 glorious minutes overnight, Revolut showed Bitcoin trading at 2 cents, a 99.99% crash that existed only inside their database. Push notifications went out, panic was real, and somewhere a guy with a market buy order is still crying into his pillow. Revolut blamed a third-party data provider, which is corporate speak for somebody unplugged the wrong cable. Meanwhile, every CoinGecko, CoinMarketCap, and Coinbase chart showed Bitcoin trading completely normally, proof that decentralized markets and your fintech app are not the same thing. Bitcoin miner IREN just landed a $3.4 billion GPU cloud deal with Nvidia, and Jensen took an option to buy $2.1 billion in IREN shares at $70 a pop. The Bitcoin mining to AI pivot is officially the most lucrative career change of the decade. This is what happens when you spend years building giant power-hungry data centers. Eventually, somebody with a checkbook the size of a planet shows up looking for them. IREN now has more than $15 billion in commitments between Nvidia and Microsoft. Not bad for a company most people called a glorified ASIC farm 2 years ago. Coinbase went dark for hours Thursday night because, get this, Amazon's data center in Virginia couldn't keep its temperature controls running. The biggest crypto exchange in America got knocked offline because somebody at AWS forgot to pay the air conditioning bill. And then Amazon publicly disputed Coinbase's version of events, claiming only a single availability zone went down. $2 billion companies bickering over which one of them is more incompetent. Meanwhile, Bitcoin kept finalizing blocks every 10 minutes like it always does. Decentralization, anyone? Kraken's parent Payward just filed for a national trust bank charter with the Office of the Comptroller, jumping in line behind Coinbase, Circle, Ripple, and basically every other crypto company that suddenly decided being a bank looks pretty fun. 2 years ago, they were getting debanked. Now they're applying to become the bank. This is massive for institutions who've been waiting on federally regulated crypto custody. The wall between traditional finance and crypto isn't crumbling. It's being formally approved by the federal government. Watching the gatekeepers hand out keys gets funnier every single week. While America passes stablecoin laws and mints over $300 billion in dollar-backed tokens, ECB President Christine Lagarde just told Europe, we're good. She called euro stablecoins, quote, not an efficient way to strengthen the euro, and warned about structural weaknesses, which is central banker for, please don't take my job. Industry leaders absolutely roasted her in the press. The CEO of a tether-backed euro stablecoin company basically said, the US passed laws while Europe gave a speech explaining why it shouldn't try. The euro's global role isn't slipping. It's being held under by its own central bank. SEC Chair Paul Atkins just signaled brand new rules built specifically for on-chain markets and AI-driven trading, a sentence we literally could not have written 2 years ago. After years of the previous chair suing every project on the planet, watching the SEC actually try to write rules instead of subpoenas is genuinely refreshing. This is the regulatory clarity the entire industry has been begging for since 2017. Builders can finally plan more than 1 quarter ahead without lawyering up. About time. Senator Elizabeth Warren just sent Mark Zuckerberg a letter demanding he disclose every detail of Meta's stablecoin plans before the Senate votes on the Clarity Act. She's worried about competition, privacy, and 3.5 billion Meta users moving on-chain payments, which, fair, but Meta abandoned Libra 6 years ago because of senators just like her. The hilarious part, Meta isn't even issuing its own stablecoin. They're just paying creators in USDC. Warren is asking Zuck to spill on plans he says don't exist. This is regulatory theater, and the show is honestly pretty entertaining. Spot Bitcoin ETFs just pulled in nearly $1 billion over 2 days as Bitcoin reclaimed 80,000. Total assets under management hit $109 billion, and Tom Lee is on TV calling this crypto crypto spring. Spring? My guy, it's been crypto every season since the ETFs got approved. Sentiment is somehow still bearish even as ETF buyers keep stacking. That's the bull case in one chart. Everyone's miserable, money keeps flowing in and price keeps grinding higher. Wall Street really did give us institutional buying with extra steps. And one more time, huge thanks to Compete Token for sponsoring the show. Links in the description. Outro. That's today's pulse. Stay greedy and we'll see you tomorrow.